Hello everyone, welcome back to my channel. My name is Feyima and I post videos about my life in Canada as a new immigrant and how to get here. If this is your first time here, thanks for clicking. If you're a returning subscriber, thanks for always coming back. In this video, I'll actually be sharing with you all the information that I know about RRSPs here in Canada. If you've never heard that term, it's okay. In this video, I'll be breaking it down as simple as I can so that you can understand this and not make certain mistakes that some people made when they came as newcomers to Canada. Stay tuned. Before we jump right into it, I just want to let you know that I am not a financial advisor. If you're looking for financial advice, please consult your financial advisor at your financial institution or consult your accountant. I'm neither an accountant or a financial advisor, so please do not take this as financial advice. An RRSP is a registered retirement savings plan which is offered by the government for you to be able to get some tax benefits when you contribute. As long as you live in Canada and are under the age of 71 and have actually earned Canadian income, not just earned, but declared Canadian income in your tax filing, then you are eligible to open and contribute to an RRSP. Here are some of the benefits of an RRSP. Number one benefit is that the RRSP is tax deferred. This means that you can actually save on taxes now and pay in future. Any interest, capital gains, or dividends that you make within the RRSP is tax deferred. So you do not have to pay taxes as you earn that income. You can pay the taxes when you withdraw from your RRSP. Another benefit is that your contributions to an RRSP is actually tax deductible. Okay, so when you contribute a certain amount, you can actually claim it as a tax deduction to reduce your taxable income and thereby get a refund. I'm going to explain this in more detail. You can see an RRSP as an umbrella. Okay, an umbrella that can take a savings account, a GIC, which some of you might refer to as a fixed deposit, depending on the country you're located in. You can also put in stocks, ETFs, so you can have these numerous investments within the RRSP. Any income you earn on your RRSP, interest, dividend, capital gains, will continue to compound tax-free until you actually withdraw from the RRSP. The major benefit of this plan is to reduce your tax obligation and pay taxes later. It is not a tax-free account like the tax-free savings account, which we will probably cover in a different video. It is an extremely helpful tool for people who are in higher tax brackets right now, who are trying to reduce their tax obligations and possibly pay those taxes at a later time, probably during retirement when they're in a lower tax bracket because they're only earning retirement income. Here's a simple example for you. Julie, okay? Julie is currently earning $50,000 and her income tax rate is 20%. Her tax for the year is $10,000 and it has been coming off her paycheck on payday. She contributes $5,000 to her RRSP and uses it as a tax deduction during tax filing time. When she's filing her taxes, she can go ahead and file her income to show that she made an RRSP contribution of $5,000. $50,000 minus $5,000 is $45,000. Now her taxable income for that year was $45,000 and 20% of $45,000 is $9,000. Because she paid $10,000 in the previous year through her paychecks, now she will get a $1,000 tax refund because $10,000 minus $9,000 is $1,000. And now she can take that money and even reinvest it into her RRSP. When Julie retires or turns 71, her RRSP would be converted into an RRIF, which is a registered retirement income fund. That will now serve as her retirement income. It's going to be a source of income for her and it's going to be paying her a certain amount bi-weekly, weekly, monthly, whatever she chooses. As she gets that money from her RIF, now it becomes income and she has to declare that amount as her income for that year. Now imagine what tax bracket she's going to be at that age when she's retired and not making as much money as she was in her prime. The assumption is that when you retire or at age 71, you will be in a lower tax bracket because you'll be earning less money than when you're in your prime. Even if you're not earning less money, you're able to, do some adequate tax planning with an accountant or financial planner to make sure that you keep your tax bracket low in old age. This way, instead of paying 30% when she was much younger, maybe when she was earning $100,000, now she's probably going to be paying 18% in taxes because, you know, she's now elderly. She isn't working as many jobs anymore. She isn't earning as much anymore in retirement. So this way, you're not just deferring taxes, you're also saving. Newcomers are very fond of over contributing into these accounts or these plans. The RRSP, it has a contribution limit, okay? And if you're a newcomer to Canada, you do not have any room because it calculates your room based on your previous year's Canadian income. So if you've never earned money in Canada, that means your contribution room is 0. So if you contribute into an RRSP, they start charging you 1% per month of the over contribution. Anything above $2,000, because they give just a little bit of a mercy for the first $2,000 that you over contribute, but the rest of it, you get charged 1% per month. Okay? So avoid doing that. There's also interest on that money that you're going to be owing the government, and there's also penalties for late payments. Okay? They might not even contact you. So they contact some people, they don't contact some people, and they let them find out themselves years after when they've accumulated so much money in debt to the federal government. Basically, the Canada Revenue Agency. That's the body that governs taxes in Canada. Okay, so definitely find out what your RRSP and TFSA limits are. I'll provide more details about RRSPs probably in another video.
The contribution room accumulates, so if you do not use up your contribution room when you have it, you do not lose it. It carries forward to the following year, and you can use it in future when you need a tax break. There are also ways to utilize your RRSP if you have to withdraw it before retirement. Let me know if you need a video on this and I'll be sure to film one. Thanks for watching. Bye.